Hi everyone, my name is Piterpakulski. Today we'll continue building financial model for a real estate acquisition. So this can be a house, this can be an apartment that we're going to, so we'll have a rent as a revenue in this project. And during previous videos, we were creating the algorithms for house price, down payment, loan parameters, rent payments. Then we specified when the deal is going to happen, when we're going to buy a house or an apartment. Then we were specifying the time to the first deal. Then we started specifying leasing contract term. Then we assumed that we may have some time to so we have 24 months, let's say, for the leasing contract, and then a tenant drops and we need some time to find a new tenant. So all blues are the inputs, so we can play with these inputs the way we want. Then we calculated the revenues. Here are the inputs for rent inflation. This is the year, this is the inflation rate. Then we started with specifying operating expenses. So these are the names of the expenses. Here is the typical year where we can specify the seasonality of these costs. Then we specified for each of these expenses, we specified the inflation rate. Then we added initial acquisition costs. So before the deal, we may have some expenses before the deal happens, and here they are. We specify them, and then we put them inside the timeline. Then we model the loan, the inflow of the loan, the principal payments of the loan, interest payments of the loan. And now it's time for us to build the cash flow statement, to look at the project, at the breadth of our project. So this will be the topic of our today's video. And at the end screen of this video, I'll be giving the link to the playlist where all these videos will be kept, how I created this model from scratch, video by video. And when the whole model will be ready, I will be giving all the links at the description of this video on the whole process, how I've created this financial model from the very beginning. So if you find this video valuable, you may give us a like, subscribe, share this video with your friends. You can also order financial models from scratch for your unique business ideas. We can help you with that. And let's start building the cash flow statement. So first of all, let's create the timeline for the cash flow. So let's name it cash flow statement. So first of all, let's start with revenues. So revenues, we will pick from rent. So this is the green line, will go to the rent. So greens will be revenues or inflows, and reds will be like this, will go to expense. So as we can see here, So here the revenue starts. This is the contract, and drops. We need 2 months to find another tenant, and here a new contract starts. Now we're moving to operating costs. So operating costs I will be pulling from here. So these are operating expenses. Then we are moving to taxes. So let's add a small block of inputs here. So we will create a small block of inputs, taxes, tax. So for example, revenue tax and asset tax. So these will be the inputs. So revenue tax, this will be percentage. For example, let it be 3% from revenues. Asset tax, for example, this can be $250 monthly. So then we are moving here. So putting the names of taxes down. So the revenue tax will be the revenue multiplied this value. Then asset tax, we need to know where the deal happens. So for that purpose, so this is the deal, and since this moment we will start paying the asset tax. So I will add 2 lines here. So this will be times the first deal. So this will be the formula for the first month, and this will be the very simple formula for the second month. So asset tax, here this will be dollar per month. So I will just multiply this line on the tax value. So I will color this line with red because it goes to the cash flow statement. Now I'm going back to cash flow statement. Link this line to the statement. So now I'm creating the first block of the cash flow, the result from operating activity. This will be revenues minus operating costs minus taxes. So this will be the first part of cash flow statement. Then we go to investment activity. So total of investment, I will color it with blue. So here we will place initial acquisition costs before the deal, this is the first part of investment. And now property, I will add this line. So if and oh, by the way, we don't need that. We can write a more simple formula. So we have the cost, the price of acquisition of a house, of an apartment. Let's freeze it, and now we will multiply it on the deal moment, deal start. Let's press enter. Now let's create the totals for these lines. So these are the expenses during the investment stage, the house or an apartment itself, plus acquisition costs before the deal. And then we create the second result. This will be the result from investment activity. This will be minus this line because the investments are outflows. Then we are moving to financing activity. So I will put here down payment, then equity, other equity. So this will be the input. I will color it with blue. Down payment will be, I'm going to the top. Down payment is here, so I'm taking this value and multiply down payment on the moment when the deal happens. Then we are adding the inflow of the loan. Then we are adding principal payments, and then we are adding interest payments. Now we are creating the third yellow line. This will be the result from financing activity. This will be down payment plus extra equity plus inflow minus principal payments minus interest payments. Maybe we should add the profit tax. Let's create a block for this. Let's say profit tax. So it will have a percentage value. Let's say it can be, let's say 5% from profits. This will be an input as well. So asset tax, we are adding here a line. So profit tax will be, so for the profit tax we will write a simple formula. So if revenues minus operating costs minus revenue tax minus asset tax minus principal payments minus interest payments, if this component will be more than 0, we will take this, the result of this exercise, and multiply it on the tax rate. Otherwise 0, we're closing brackets. Then we are creating totals. We're adding this component to the taxes. And now we will create the last two lines, by the way, of the cash flow statements. Statement, by the way, we can group this. So view, data, outline, group. We can group this data. We can group this as well. We can group this. So now we will create the line for the cash balance at the beginning of period. So here will be 0 for the first month, and then cash balance at the end of period. At the end of period. And this will be the last line of the cash flow statement. So cash balance at the end of the period will be the result from operating activity plus the result from investment activity plus result from financing activity plus cash balance at the beginning of the period. Now we are putting this value at the end of this period. This will be the beginning balance of the next month. Now I'm extrapolating this formula to the right. Now I'm taking these two cells and I'm just extrapolating these formulas to the right. So now we are ready with our cash flow statement, and the next lesson will be devoted to calculating of the total financing needed for the project. Hope you enjoyed this video. You may give us a like, subscribe, share this video with your friends. You can also order financial models from scratch. At the end screen of this video I will be giving the link to the whole playlist where I'm creating this financial model from scratch. And when the model will be ready, I will be putting all the links on creation of this video in the description of this video as well, so you can go deep in the description of this video later and just watch all the videos from scratch, how the process was going on from basic inputs to the cash flow statement to for example other financials, so you can watch the whole process from scratch. So thank you guys for watching. See you in next videos. Thank you and bye.